Morning, guys. This one's going to be relatively quick in terms of a stream. There's not really that much in terms of an update. We're still playing ourselves out in terms of what we've said for over a year now. And we still currently, I feel, very early in the accumulation schematic big picture. So, in terms of where we are, Elliott Wave, I think we've come down, we've had that kind of seller's climax. And we're in the situation now where we've just got the kind of sideways action when the big players actually just sell off. So we've got the sell off happening alongside that accumulation phase that will allow then the price to actually rally back up again. But I think every little dip you see in kind of crypto Twitter actually be, this is going to 100K, this is going to, guys, we've seen the story over and over and over again for the last year or so. I've posted quite a few things on Twitter in the last couple of days, specifically highlighting these. You see Moon Carl tweets and Plan B tweets. These guys were calling for 135K last December, right? So you got to understand, even a broken clock is right twice a day. These guys needed a full calendar year, and they're still not right. I think the trouble being, just because people want high prices doesn't necessarily mean we're likely to get them or anytime soon, right? Companies like BlackRock coming in, Grayscale the same. A lot of people are just kind of under the impression that these guys come in and price rallies up. These guys are looking for fair market value, right? It doesn't necessarily mean the lowest price, right? That's again another misconception of many. A lot of people assume that these guys come in, they're either going to do one of two things. The price is going to go to the moon, or the price is going to drop so significantly because they want that price much lower. That's not necessarily true, right? The fair market value is something that I've explained in loads of the trading view posts and whatever over the last 18 months or so now since I've been making these public. I think the reality is understanding these key levels will be crucial for almost optimal entries, right? You're not trying to catch the bottoms, right? You're definitely not trying to catch the tops. In terms of something like Bitcoin, you're looking for the long term play with kind of confidence and reassurance that you're going in on confirmation, right? So, in terms of where we are and what we've said, like I said, over the last 18 months, I just want to highlight a couple of things, right? So, let's firstly go into the COT data, right? So, over the last year or so, if you look at this leverage funds, right, and this is part of our Discord again for subscribers, and guys, for you guys that are actually subscribers, I'll be going into this in a little bit more detail in a video straight after this one, right? So, in essence, in terms of where we are leverage funds are relatively slow moving, although it's a long period of time, right? And I'm only saying they slow in comparison to asset managers, right? So when I take a look at these two charts, what I'm seeing in a nutshell is asset managers are net long, right? So that's kind of a good sign for Bitcoin in summary, right? It's almost like looking at a 3,000 week moving average, right? Because a lot of these moving averages and, pi top calculators, and they're not really based off anything, right? They've worked once, they've bounced off twice. You can change the settings, and a moving average will always have a bounce off that moving average at some point in time, right? The reality is understanding, I suppose, the logic that underpins this is as simple as saying, are the big institutional players, like Composite Man, are the big institutional players interested or not, right? And it's kind of as simple as that. So you look at it from an asset manager's perspective, and this is like saying, we're above a certain moving average over a certain period of time for the long run. There's your snapshot. In terms of the shorter time frames, the leverage fund, this is what kind of creates, in essence, the moves within the bigger moves. Okay, so when I see the leverage funds right now in terms of Bitcoin's leverage funds, the fact that we're still pretty much net short would suggest that this four move down from the all-time high has not been completed, right? Now, you see a similar kind of snapshot with Ethereum, right? We've actually got the gap tightening with Ethereum, right, which could actually hint towards Ethereum being slightly ahead of Bitcoin. Now, one thing that is interesting is we actually had a little bit of a blip back around, what was this, April, May time, right? Where asset managers kind of picked up some and almost immediately dropped it back off, right? This for me was just showing the market outside of Bitcoin in terms of crypto was not quite ready for the big picture, right? Now, fast forward, a year, and we can actually see, well, it's not quite a year, fast forward, 9 months. And what we'll actually see is that the kind of buy-in that we're seeing here means that, again, in a nutshell, crypto isn't dead, right? This is the big boys. This could be the likes of BlackRock and so on, now accumulating for the long run, right? So it just means that because we're doing what we're doing and we kind of playing around these low prices, it doesn't mean that's death to crypto, but it also doesn't mean that we're off in one straight run straight to 135k, right? That's just not how trading works. Okay, so in terms of where we are, I'm looking at the same situation as we've seen, like I said, almost for 18 months coming up, right? And the reality is, knowing the situation over that last 18 months, you can easily identify where we are in the sequence, right? We've talked about the roadmap, and this was done last March, I think 2021, yes, so last March. We talked about the weekly 3, 4, and 5, right? Now, obviously, the 5 didn't get as high as I would have expected. We had a nice truncation on the 5. But in essence, in the grand scheme of things, right, ignore the numbers here. This is just, arbitrary numbers on the background. The idea is just knowing where we are on the map, right? The numbers are in a bit more detail as we go down the chart, right? So you'll see March last year, right? This was 2021. We actually had the 3, the 4, and the truncation on the 5, right? As we were expecting the move down. I didn't like this move from the low, didn't like the move up to the first one, back down for the 2. We clearly saw the 3, the 4, and the 5, right? So again, knowing where we are, that 5 was the weekly 5, which would equate to the monthly 3. Okay, so again, you've got to look from the period of March 2021 through to October 2021 for a weekly 3, 4, 5 move. Now you can times that by 4 in essence for a monthly move. Now it doesn't necessarily have to be time for time, but what I'm saying is you could elongate the move out and it still be acceptable in terms of a time frame. Okay, again, it's just kind of followed the path. You can see 24th of August, I've covered this, guys, a million times, right? And it's not just me saying, hey, look at what we said, this is what's played out. This is more to do with the fact that it's becoming institutionalized, and the fact that it's becoming institutionalized makes it a lot easier to read and understand why we are playing this kind of logic, right? So understanding that we had the 1-2, and if it was the 1-2, which it actually turned out to be, then in essence, running the fib extensions give us a truncation on the 5. And that's exactly why it said, we're likely to see 65. And why I say 65, 65 was the previous high. The idea of going just above that would have been to sucker more longs in preparation for the larger scale drop, right? So we would have seen obviously under 40k, and again 40k would have been the value area in terms of where things were, back last year. So now all we've done is, play itself out. We've talked about the distribution and the accumulation, and again, I've had conversations recently where people are saying, "Oh, well, we could be in redistribution." Yeah, we could be, but the reality is there's not much space to go when you're looking at the monthly 3, 4, 5 moves. Okay, so the likelihood is we've actually had the sellers climax. We've come on down from this in October 21st, right? So you can see this kind of level, right, where that climax was about to take place on the distribution side, and then we were likely to fall down from this. I'm going to come across back into the charts, right? You can see in terms of what the call was there, and then from there, why we were on the daily schematic coming down from the distribution schematic into, right? So again, to answer the questions in terms of are we distribution, redistribution, or accumulation, the waves tend to happen, right, in kind of three formats, right? When you see a 0-1, back down 1-2, up for the 2-3, 4-5, right? And that tends to be the overall cycle, right? So the reality is, if we look at this, we have distribution on a smaller scale, distribution on a smaller scale, large scale distribution, right? We have an accumulation, we have an accumulation, we have an accumulation, and the next accumulation doesn't happen until we come back down at least to this line, if not further down again, depending on the actual move, right? So understanding the chart patterns, we could actually say, well, we've come on down, right? We've had the first redistribution. We've come on down, right? We've come back up. We've had a larger redistribution, and we've now come on down, right? Which means distribution, distribution, right? Distribution, distribution, right? Now, in terms of where we are right now, we got to flip this to the inverse and say a small level there, right, is possibly the value area, right? So in terms of confirmation, I'm looking at 30K plus before we actually get validation that this could be the end of the downtrend. But as I've said in the previous streams, I get the impression that we're very early on in this schematic. We're having the A, right? We've got a very slow slanted B, which hasn't actually completed yet, right? From there, we'll come back down for the C. Doesn't have to be deep, right? That C will equal the spring, and then we can go on up, right? And in an ideal world, we'll have the sign of strength in and around 30K, and that will give us then the retest, and off we go again, right? So that's where I think we are. I don't think much has changed from what we've already covered. We've already gone into the logic behind the COT. We've covered the roadmap in terms of where we go in, why, right? We've kind of played out the key levels, and any more depth than that, like I said, we're going to put across to the subscribers first. So that's where we are. I'm going to leave it like that for today. Thanks for tuning in, and we'll see you in the next stream. Cheers, guys.